In the late 1990s, people believed the internet could never fail. Companies with zero profit became worth billions of dollars. Then, in just 30 months, over $5 trillion disappeared. Millions lost their life savings because of one giant bubble. To understand this crash, we need to go back to the early 1990s. Back then, the internet was almost unknown. No YouTube, no Google, no Instagram, no smartphones. If you wanted information, you opened a book. Then, everything changed. A new invention, called the internet, started connecting the world. People were amazed. For the first time, you could send information across the world within seconds. Businesses realized this wasn't just another invention. It could change everything. And investors had only one thought. If a company uses the internet, it must become huge. It didn't matter if the company earned money. It didn't matter if it had customers. One thing mattered: .com. Adding .com to a business was almost like printing money. Wall Street became obsessed. Every week, a new internet company was born. And then came the biggest opportunity, called the IPO. It was a company's first day on the stock market, and people were obsessed. The moment a .com company went public, its stock price could double within hours. People weren't investing because the businesses were good. They were investing because everyone else was. This is called FOMO. Fear of missing out. Teachers invested, doctors invested, taxi drivers invested, even people who knew nothing about stocks. Wall Street had one simple rule: buy first, ask questions later. Soon, new internet companies started appearing every single day. Some had great ideas. Others had no business model at all. Yet, both received millions from investors. One company sold pet food online. It was called pets.com.
No sustainable business, but $1 billion valuation. The bubble was only getting started. Then, something unbelievable happened. Investors stopped asking one simple question: is this company making money? Instead, they asked, how fast can this company grow? Growth became more important than profits. Money flowed into startups faster than ever before. Millions became billions. One company burned millions of dollars every month, yet investors wanted more shares. It wasn't investing anymore. It was pure speculation. one company sold pet food online. It was called Pets.com. People laughed. Who would buy books on the internet? They thought it would fail. But Jeff Bezos had a different plan. He wasn't chasing today's profits. He was building the future. Meanwhile, another company was becoming the king of the internet, Yahoo. And then there was Cisco, the company selling the equipment that powered the internet itself. By early 2000, the entire world believed internet stocks could only go up, and that belief would soon become their biggest mistake. It was March 2000. The Nasdaq had reached its highest point ever. People believed the party would never end. Then, without warning, the market stopped climbing. For the first time, felt nervous. Growth became more important than profits. Some investors decided to sell and lock in their profits. It seemed like a normal correction. Then came companies that would actually survive. But those small sales created something dangerous. Fear. One investor sold, then another, then thousands followed. The bubble started collapsing. The same people who couldn't stop buying now couldn't stop selling. Growth. Stocks that doubled every week started falling every single day. Billions of dollars vanished. Then hundreds of billions. Soon it became trillions. Companies that were worth billions yesterday became almost worthless. Thousands of startups ran out of money. Without investors, they couldn't survive. Even famous companies started disappearing. The internet wasn't dead, but the hype certainly was. Of the crash, more than $5 trillion had disappeared. The biggest bubble of its time had finally burst. But here's the strange part. Not every company died. A few survived. One of them was Amazon. Its stock had crashed over 90%, yet the company kept building. One of them wasn't chasing its stock price. It was chasing customers. One of them spent money on advertisements. Amazon invested in its business. One of them. Then there was Pets.com, one of the most famous .com companies ever. One of them. A superstar, almost overnight. But behind the headlines, the company was losing money. One of them. Stopped giving new money, everything collapsed. One of them. In less than 300 days, Pets.com was gone. Lost their jobs. Millions lost their savings. Some people lost everything. The crash. The internet. It destroyed blind optimism. The lesson was simple. A great idea doesn't always make a great investment. And just when everyone thought history would never repeat itself, another technology began changing the world: artificial intelligence. Today, Many people ask, is AI another dot-com bubble? It's a fair question. Both started with a revolutionary technology. One changed the internet, the other is changing intelligence. Both attracted billions of dollars. And both created massive excitement. Both attracted, but excitement alone doesn't build great businesses. Execution does. Both attracted. The dot-com crash didn't prove the internet was useless. It proved bad businesses don't survive forever. Both attracted. The winners weren't always the most popular. They were the most prepared. Both attracted. Real investing isn't about finding hype. It's about finding value.
Markets can stay excited for years, but eventually, numbers catch up. Revenue, profits, cash flow, these things still matter. But excitement alone doesn't build great businesses. Revenue, technology can change the world. But valuation still matters. That's why the dot-com bubble is still studied the more than 25 years later. And just when everyone thought history would never repeat itself, because markets, the dot change, is still studied the more than 25 years later. And just when every greed repeat every generation, because markets imagine buying the right technology at the wrong price. Even a great company can become a bad investment, because markets imagine buying the right technology at the wrong price. What happened to thousands of investors in 2000? Because markets imagine never invested again, not because the market was broken, because their confidence was. Growth, every bubble, imagine, creates new millionaires. But after it bursts, only the strongest companies remain. Every bubble, imagine, doesn't repeat exactly. But it often rhymes. That's why, imagine, smart investors study history before they study charts. That's why, imagine, behind every chart, there are human emotions. Imagine buying the right technology at the wrong price. Fear creates crashes. Greed creates bubbles. Balance creates wealth. The biggest fortunes aren't made by chasing every opportunity. They're made by choosing the right ones. Sometimes, the best investment isn't the fastest growing company. It's the one that survives.
The dot-com bubble changed Wall Street forever. But it also made the modern internet possible.
Sometimes the bubble bursts. But the technology still wins. The question isn't whether technology will change the world. The question is, which companies will still be here 20 years later? That's the difference between a trend and a legacy. Markets reward patience, not panic. And remember, every generation believes this time it's different.
Sometimes it is. Sometimes it isn't. Only time reveals the truth.